Welcome to this short video that explains how enterprise investment schemes can work for private investors in the UK to save them tax and reduce the risk of investing in startup businesses. We're living in a time when the returns on savings are very low and do not keep up with inflation, meaning that you effectively lose money in real terms by leaving it in a bank account. And in today's turbulent economic times, in which a number of large financial institutions and governments have failed, no financial institution is immune from financial distress, so putting your money in a bank is not as safe an investment as it used to be. At the same time, many small businesses are finding it very difficult to raise the money they need to grow their business from retail banks, who are lending less in response to the tough economic times, and it is also notoriously difficult for new businesses to find private investors because of the risk inherent in all startup companies that most investors are unable or unwilling to take. To bridge this gap between investors who have capital and businesses that need it, the UK government introduced a tax scheme called the Enterprise Investment Scheme, or EIS for short, back in 1992, to lower the risk of investing your money in relatively new businesses. Investing in a business that is an EIS significantly lowers your investment risk by giving you a tax rebate of 30% on your investment. Here's how it works. As a private investor living and paying tax in the UK, you can invest between £500 and £1 million in an EIS in any tax year. In return, the UK taxman, also known as HMRC, will give you a 30% tax rebate on your investment, claimable against the tax you paid in the last tax year, or tax you have paid or still owe in the current tax year. This effectively transfers 30% of the risk inherent in the investment to the UK government. If the company succeeds and you make a profit on the sale of your shares, then you're also exempt from capital gains tax on that profit. And if you have a capital gains tax or inheritance tax liability to pay in the current or next tax year, or have paid any of these taxes in the last 3 or 2 years respectively, you can claw back and/or defer tax equivalent to 28% of the capital you have invested in the EIS business, effectively transferring 58% of your investment risk to the UK government. And if the company fails, you can also offset your loss against your income tax, giving you another 28% of tax relief if your marginal tax rate is 40%. In short, by offering these generous tax incentives to investors in companies that qualify as EISs, the UK government is taking a lot of the sting out of an investment that goes wrong and improving the return on an investment that works, making it much easier for private investors to invest in these companies. If you are a private investor looking for a way to reduce your investment risk and save tax at the same time, investing in an EIS is undoubtedly one of the most interesting and potentially profitable investment opportunities on offer in the UK.